Okay, so thank you guys for coming here. This is a panel that I wanted to share with the community about why the financial reporting is so important and the accounting is so important for tax purposes. The main conversation here is why tax season problems come down mostly or almost always to bookkeeping problems. So first of all, you all know I'm part of the DBCS. I'm the business development manager. In the DBCS, we provide three types of business lines. The first one is business advisory, which focuses on strategic decisions and strategic advisory to clients. This includes business planning, FP&A, fractional CFO services, investor support, tax strategy. But we also have the support service, which is, let's say, the back office or the day-to-day operation in the accounting and finance department or area. Here we provide the basic bookkeeping services, but also we provide AR and AP management. We provide operation support, payroll for companies with less than 10 employees, and sales tax. But we also provide the registered agent services in Florida, where you can use DBCS physical address as your address to receive notifications from the bank, from the state, from the government. If you have an active lawsuit against you, you can use our address, so that your employees don't notice when you get notified about the lawsuit. You guys are not served in front of your employees. So the founders of the BCS support is Dominic Viceglia. He born and raised here in the United States, half from the Netherlands, half Italian. He studied international business and finance in Bar University, and he went straight into creating the BCS support to help small and medium-sized businesses to grow their financial operations. We have David Simonetti, who is a CPA. He studied in the University of Miami, but he went straight into corporate, leading the accounting and taxation departments with clients like WeWork and Snapchat. And this is me. You all know me. I'm the business development manager, born and raised in Colombia. I studied international business in Colombia, and right now doing an MBA in finance in FIU. I've been working, I've worked in 3 different countries, I speak 4 different languages, lived in 4 different countries, and I have experience not only in finance and accounting, but also in politics, in marketing, and fashion. So coming back to the topic, why tax season problems are almost always bookkeeping problems. So I wanted to remark here that most of the problems are not coming essentially from doing the mistakes itself, but more based on misperceptions of what accounting is and how accounting should be managed. So the most common case that we hear, 80–90% of our clients come not prepared on time. They come right on tax deadline, thinking that it's gonna be super easy because that's one of the misperceptions I'm gonna be talking about, that they think accounting is super easy, or they say that everything should be only data entry and just report the income, and no. So we hear a lot, and maybe you have heard too, things like, I need to prepare my financial statements now because the tax deadline is in 2 weeks. Or I'm very stressed because the IRS is going to penalize me for filing late. Or as a business owner, I have to do everything myself. I don't delegate because I don't trust anyone, and I'm not sure I'm doing it right. This brings a lot of concerns and consequences, like penalties and interest for late tax filing or payments, but also high CPA fees due to rush work that your CPA has to do. If you come to your CPA 2 weeks before the tax deadline, that CPA is going to charge you way more money because they are charging you a rush fee. Accounting is not easy. Accounting is not simple. It requires a lot of time and a lot of questions between the business owner and the accountant. And also, these bring consequences like tax surprises when everything seems fine. So going into the misperceptions that we have, people tend to be late because most misconceptions. Like, for example, the first one is my bookkeeping is way too easy, right? The business owner think that bookkeeping is just data entry, just whatever comes in the bank is a deposit, is revenue. Whatever comes out of the bank is an expense. So business owners who are not very into the financial or the accounting department, they tend to think like that, and then they think, I already send my bank statements or invoices and expenses to my accountant. Accounting is just data entry. When in reality, every single transaction should be backed up or translated into four accounting statements, which is the P&L, the balance sheet, the general ledger, and the trial balance or cash flow statement. Now, for it to be translated properly into these four financial statements, it's very important to the categorization of those transactions. Not all the deposits are revenue, not all the withdrawals are expenses. So it's really important because some of these transactions may hit the P&L, which is where the IRS focuses more on taxing the business. Some others hit more the balance sheet. So, for example, here at the Chamber of Commerce, I know there are a couple of marketing agencies. Some practices of these marketing agencies, especially digital ones, are when you invest in, let's say, Meta ads or Google ads, the agency charges the client in their invoice whatever amount they want to invest into the ads, and then they use that money to pay Meta or to pay Google, right? So if you recognize this, let's say here in this invoice, we have social media management, $3,000, project management, $500, but also social media buys, $817, right? So if you categorize this as a revenue, this is going to impact directly your P&L. If it impacts your revenue, it will impact your net operating income, which will likely, or which will impact your taxes. But if you recognize this not as a revenue, because this is not money for yours from your services, this will be properly categorized as a liability. Therefore, it will impact the balance sheet, not the P&L. Therefore, you can decrease the tax liability in this case just for doing a legal, compliant, and proper categorization of what it really is. So a bookkeeper that is not proactive on asking how you charge your clients, how you recognize your revenue, will just put the total amount as a revenue. Therefore, you will be overpaying taxes afterwards. Another example that we have is we have a client from New York. She has her business, but she has been receiving a check for $4,000 every month. If you go to the bank and ask for the bank statement, you can see that the checks don't mention where it comes from. They don't mention what it is. It's just blank, like this. So when we went and asked to the client, why are you getting paid $4,750 every month? What is this? She said, oh, it's because my grandfather, he's giving me money because, I mean, he wants to, and I'm putting it inside the business. This is not revenue. This is not the services that I provide. So we told her, like, wait, hold on. If you're doing that and you're recognizing it as a revenue, you will be paying taxes way more than you need. So the proper way that we categorize this was as a contribution from the shareholder, which is this client. Therefore, this check or this deposit will not be impacting your P&L. Therefore, this will not be impacting your taxes per se. So this is why this is very important to recognize the revenue as well as the expenses. The second misconception that we have faced is that a lot of clients or customers, they think that because they don't have money in the bank, they don't owe taxes. This is wrong. The IRS calculates taxes not on cash flow, but in net operating income or net business income. Your business may be very liquid and may have a lot of cash, but may not be profitable. And the other way around, your business may not have cash, but may be very profitable. So why this? There are three sources of cash flow to come in and to go out, right? There are the operating activities, the finance activities, and the investing activities. The taxes are only paid based on the operating activities. So the operating cash flow, which should make sense with the P&L. If you're receiving money from finance, which is essentially investors, loans that you get, or from investing, which is, let's say, you sold an asset of your business, those cash flow, inflow of cash and outflow of cash will not impact your taxes. It's only based on the nature of your business. So, for example, let's say that you just created your business, right, 2 years ago, and you have this year reported a net operating income of $50,000, right? You should be paying taxes on those $50,000. But then you go to the bank and you say, where is that $50,000? I don't see it. So why should I be paying taxes based on $50,000? If you have a cash flow statement properly recorded, and you can see that maybe you had a loan from when you started the business, therefore you are paying that loan. The payment of the loan is not deductible. The interest is, which is different. But out of, let's say you're paying $5,000, $5,500 to the bank, only 500 is the interest, only that 500 is deductible. The 5,000 is not. So you say, I don't have money in the bank, I have only $20,000. Why should I be, where is the $50,000? That's the answer. Your money may come in or may out, may come in or may come out based on paying loans, paying investors, paying expenses, of course, on the operating side, but also buying or selling assets. The third misconception is that I only need accounting for tax season. This is very wrong, not wrong, but more mediocre, I would say, because accounting is the backbone of your business. You will only understand your business and how it's actually being profitable or not, or successful or not, based on whether it's making money or not. And your accountant is your business best friend together with a lawyer. So we have two scenarios, right? Let's say right now, it's February 2026, you have to file taxes for your business, right? You have the deadline that is approaching, but you need to file your 2025 taxes. So what's your bookkeeper task? Just enter 2025 data and categorize properly. That's it. The result is a very passive reaction to your taxes, right? You cannot do or pay anything to be recorded to 2025 because you are already in 2026. But if you are in November 2025 and you are seeing your 2025 taxes, you will have a more proactive and a strategic approach to your taxes because you still have almost 2 months to pay or to receive more money or to do some strategies and tactics around taxing, right? So for example, we have here that this client, this is a cash flow statement, which will encompass the two misconceptions that we saw before. We see that this client had a revenue of $177,000, right? A cost of goods sold of $7,000, and then an expense of $118,000. Now, I want you to focus on this part, right? We recommended this client, so we saw that they had to pay a good amount of taxes, right, for 2025, and we told the client, listen, if you use your credit card, you can expense a lot of expenses this year. Now, that means that next year, when you're paying your credit card, those payments are not going to benefit you on your cash flow because you are paying 2025 expenses. But at least you can save, in this case, $9,500 in taxes, because we spent $27,000 in the credit card before the year end, right? So this is why this is so important to have a bookkeeper that understands not only how how accounting and your transactions will affect your taxes for the current year, but also the cash flow planning that you will have the next year. Now, what CPAs want to receive before tax season? So before tax season, I would say right now, we are still 1-2 months into the deadline. Of course, a lot of businesses, which is a common practice, do an extension, but still, your CPA expect you to receive a reconciled bank and credit card accounts, financial reports with no uncategorized accounts, that famous QuickBooks account of Ask My Accountant. Sometimes it appears a lot. If you get audited, the IRS will ask you, what is this? Like, why aren't you categorizing properly this amount of money? I saw one P&L of a client with $1 million in revenue and a $77,000 uncategorized account. That is not good accounting. You need to understand where $77,000 of your business is going to. The CPA also expects payroll documentation from the IRS and the state for companies with employees, but also for freelancers with an LLC who are S corporations, and also supporting documents for asset and investment purchase or sales. How this is going to benefit your business? You will have fewer billable hours for your CPA, because your CPA receive everything that they need and they will just go straight into making your taxes. Great CPA's efficiency, because there is going to be less margin of error, and also fewer corrections to your financials. Also, this will allow you to have more time for a strategy. So our recommendations are: hire a consistent bookkeeper who not only enters data, but also provides reports and tailor insights. So hire a bookkeeper that will tell you what's going on with your business and will tell you things that you may not know based on the operations. You may be seeing that you are just paying here and there, but your bookkeeper will tell you, hey, your I don't know, your meal expense have increased 50%. Why is that? Your car expenses are increasing 100%. Have you purchased another car? Your utilities have been increasing 200%. What's going on there? Is there a problem? So a good bookkeeper will give you tailored insights of what's going on with your business and your financials. Also review taxes during this tax year, during the year, not during the next year, because that will allow you to have a more strategic approach toward your taxes. And also pay closer attention to your accounting and finance function, because this is your backbone. This is the backbone of your business, and every business for profit business exists to make money. If you want to serve the community, which is good, create a nonprofit that even them need a lot of good accountants. But every business is there to make money and to create an impact. And if you don't understand your business expenses and income, you will not be managing properly the business. So I did receive a couple of questions beforehand on social media. So I will try to read it. It says, hi, Juan Felipe. Looking forward to your session tomorrow. Quick question. What would you say is the #1 bookkeeping mistake you see small businesses make during tax season? The main topic of this panel is being late, not paying attention enough to your accounting, to your taxes, and to your finance. Pay attention, ask questions, try to learn, try to understand what's going on. What are you receiving in revenue? What are you expensing? How much you are paying? Are you being paid yourself correctly as a business owner? Are you paying your employees compliantly? Are you filing correctly your sales tax? Do you have a sales tax nexus on other states? All those questions are very important, and you can ask them and get answers with time, not right on tax season. I also have another question here. It says, "Hi Juan Felipe. As a travel blogger and independent contractor, income isn't always consistent month to month. What's one bookkeeping or financial habit you recommend for people like me who work project to project or with fluctuating income?" Do you remember the second misconception of, if I don't have money in the bank account, I don't owe taxes? That misconception is resolved with good cash flow planning. If you don't receive consistent income month to month, but you have this month you're making a lot of money, but next month you're doing zero, but the next one you're making average, you as a business owner need to understand how you can plan when you have really good months, and how can that support you when you have really bad months. That comes with cash flow planning, that includes expenses, the forecast of expenses that you'll have in the upcoming months, how much you need right now, and how many months that, or how long time that's going to cover your business operation with the money that you receive right now. So planning and cash flow planning is the best answer for that. That in today's economic climate, what's one bookkeeping or financial strategy you believe every business should prioritize, regardless of size? One strategy is I don't see it as a strategy, because this is not something that you change every quarter or every year. I would say this is more something that you must do always, which is pay attention. Pay attention to your accounting, pay attention to your finance, and hire the right people. Don't hire just a person who's going to file taxes and don't even tell you what they did. Hire someone who will give you reports. Hire someone who will give you insight. Hire someone who will make you understand the data that they're entering. Because if you as a business owner or business manager don't understand how your money is flowing inside your business, you are not doing it properly. So more than a strategy, I would say this is a practice that you need to do, which is pay a lot of attention to your accounting and finance. I know that this is not a very exciting topic. I know this is not something that you wake up and you are like, oh my God, I'm so excited to do journal entries into my QuickBooks, but this is necessary. This is backbone. This is back office. If this is not properly done, your business may be going to bankruptcy and you will not notice. So those are the three questions that I got, and I happily answered. If you guys would like to get in touch, please get in touch to hello@dbcsadvisory.com or jfb@dbcsadvisory.com. Thank you so much. And any questions from the participants here?
I have a question. This is Kevin. Thank you, Juan Felipe. I learned a lot from your presentation. It's definitely a different area of specialization than what I'm than my day to day. But when at chamber events and outside of the chamber, when I'm at other events, who are the primary individuals that you work with in organizations that could be of value to you to make connections to?
So the best referral sources or referral partners that we have are CPAs who don't do bookkeeping.
Mhm.
We don't file taxes. We do the bookkeeping. We provide those books to the CPAs, but also we have the fractional CFO services. We work with a business coach. We work with CEOs, with CFOs. Although our services are CFO, like fractional CFO services, a lot of CFOs don't have the bandwidth to handle everything, and they hire consultants to come in. Business owners, managers, CFOs, C-level investors, also when they want to understand how their investment are gonna like have a return, how if their investment will make sense or not. So those are the main people that we can work with.
Great, thank you.
Of course. Vincent, do you have a question? Okay. Thank you so much, everyone. Maurice,
Thank you.
of course.
Thank you. Thank you. Thank you. Thank you. Bye-bye.
Bye.